Good morning, good morning, good morning. It's Thursday, the 24th of October, and this is the Morning Blast. Feeling a bit crappy again today. I've overdone it on my first week back from being ill. Where is Mr. Brown? There he is, there he is, there he is. Good lad, good lad. Good morning, Dunny. Good morning, Tom. Good morning, Darren. Good morning, Suzanne. Good morning, Steve. Good morning, morning, morning.
Good morning, Ryan. Good morning, everyone. I'm not surprised you are feeling ill, mate. As the great man Dickie Matthews would say, you drink too much.
I don't drink too much. That's
Well, you,
rubbish.
yeah,
I had a couple of
you were
beers
out with
last. I had a couple
young
of.
Thomas last night.
I had a couple of beers yesterday because I had a very good day. Wink, wink, nudge, nudge. Yeah, okay, maybe I do drink a little bit different. Anyway, nothing discussed on this basis session constitutes.
And yes, actually, sorry, as Ian the dog has just rightly said, it is that cloudy beer that you're drinking. Drink proper beer.
Oh, that was mine. That was Tom's.
Oh, that was nice.
Although I might have had a couple of pints of that as well. I can't remember. Anyway, nothing discussed on this basis session constitutes trading or investment advice or indeed drinking advice. Or any kind of endorsement by PIQ or PIQ Global Limited, Traders PIQ, sorry, or PIQ Suite, or its affiliates, including the hosts, which is Mr. Teetotal Brown and myself, not so teetotal, Mr. Paisley.
I wish that nickname were true, but
Likewise.
sadly it is not. Exactly. Right. Good morning, everybody. It was a bit of a risk-off day yesterday. Actually, I suppose if you were an equity bull, you probably needed a drink at the end of yesterday's session because the S&P 500 ended the day about 1% lower, which was the biggest one-day decline since early September. The Nasdaq down by about 1.5%, also having its biggest one-day drop since the start of last month. And also just worth noting that does now mean that we've had 3 straight days of declines for the S&P 500, which is the worst losing run in 7 weeks for the benchmark index. Obviously, this week is somewhat lacking in catalysts in terms of data. And of course, we have these big risk events on the horizon with, of course, the election looming just sort of 10 days or so away now. And of course, the payrolls report on the 1st of November and the next Fed meeting on the 7th of November. So perhaps it's no surprise to see participants continuing to take some risk off the table in advance of those big risk events that we have coming up to kick off November. In terms of markets elsewhere, it was really another day where we saw the trends that have dominated this week, not just in the equity space, but elsewhere, continuing with selling persisting across the Treasury curve as 2-year yields rose by 5 basis points, rising north of 4.1%. 10-year yields rising also by around 5 basis points, trading north of 4.25%. And of course, the move higher that we saw in yields continuing to put a bid into the dollar, with the dollar index rising north of 104.50 to its highest level since late July, and also trading north of the 200-day moving average. With those gains, again, pretty broad-based. The euro trading below 108 for the first time since early July. Dollar yen rising about 1% on the day, trading north of the 153 figure, also for the first time since the back end of July, although some of those moves have been paired a little bit overnight. And we saw cable down about 0.5% on the day, testing the 129 figure to the downside, although again, we have paired some of those declines overnight. In the commodity space, a little bit of softness coming in, with crude down by about 1.5% on the day. Gold also ending the day with fairly substantial losses, well over 1%. And that move is worth flagging, although we have seen the yellow metal recover some ground overnight. Gold hit a fresh record high for, I think, the 5th day in a row on an intraday basis yesterday at $27.60 an ounce, and then rapidly reversed course with pretty incessant selling pressure throughout the American trading session, which I think is just worth bearing in mind, perhaps a little bit of a warning sign for some of the gold bulls out there. Although I think it is, well, I think it's far too early to call a top just yet, but it was interesting to see how brutal that reversal was, given that it had been pretty much one-way traffic to the upside up until that point. In terms of catalysts from yesterday, a few bits and bobs worth bearing in mind. We did get a 50 basis point rate cut from the Bank of Canada. The BOC delivering that cut as had been expected. Rates now stand at 3.75%. The policy guidance remaining pretty unchanged, with with the timing and pace of further cuts to continue being guided by incoming economic data. The market, though, pricing in around about a 90% chance that the BOC deliver another 50 basis point cut at their final meeting of the year in December, and that comes after they lowered their CPI outlook for all of the next 3 years of the forecast horizon. Other bits of data yesterday were relatively irrelevant, to be completely honest with you, in terms of the price action at least, although flagging did see existing home sales in the United States in September fall to 3.84 million, which is the lowest level since October of 2010. Of course, this data references a period before the Fed's 50 basis point cut at the back end of September. But the housing data in the US has been, excuse me, housing data in the US has been softening. Of late, we had relatively soft building permits and housing starts figures to the back end of last week, and the MBA mortgage data was pretty grim the week before as well. So just a theme that's worth keeping in mind and seems to be bubbling away under the surface a little bit. In terms of other headlines from yesterday, we heard from Bank of England Governor Andrew Bailey. He was initially a little bit more dovish than we've heard recently, saying that disinflation is happening faster than he had expected. And then in the very next line, he took all of that dovishness back by saying that services CPI is still somewhat higher than consistent with a return to the 2% inflation target. As a result, we haven't seen any significant repricing of the OIS curve since the open this morning. We had a fairly busy slate of earnings data after hours yesterday. Tesla delivering a top line miss with revenue falling short of expectations, but a bottom line beat with earnings per share of 72 cents on an estimate of 60. They also reported solid gross margin and free cash flow figures, and also guided towards slight growth in vehicle deliveries for the remainder of 2024. Their shares really charged up and motored as much as 6% higher after hours. We also heard from IBM. IBM also delivered a top-line miss with revenue falling shy of the 15.1 billion estimate, but they also delivered a bottom-line beat with EPS at 230. Estimate was 222. Nevertheless, free cash flow expectations and the IBM guidance pointed to growth in line with that seen in the third quarter. The Bulls will have a bit of a chip on their shoulder about this because IBM fell 7.5% in after-hours trading yesterday. The only reason I report earnings is because of the pun opportunities, effectively.
You think we don't know that?
Oh, I'm sure you know that by this point. Sticking with equity stories, news overnight via Bloomberg that Boeing workers, they have apparently rejected the pay offer that was on the table. That is obviously going to cause some continued turbulence there. But it is important to bear in mind because this ongoing strike is likely to drag down the October payrolls print that we get next Friday. And given that there seems no resolution on the cards, it could even drag down the November payrolls print as well, which is obviously survey week is just after the election. Go on.
So the Boeing offered 35%. The workers' union turned it down because they're looking for 40%. So that's the gap at the moment. There's a 5% in it.
We will see how long it takes for that to get resolved. And last, but by no means least, more news on the budget. Of course, that comes next Wednesday. The Guardian reporting yesterday. Yes, sorry, I have to quote The Guardian. They were reporting yesterday that Rachel Reeves, who's obviously the Chancellor, might be considering changing the debt measure that the government use in order to gauge fiscal headroom. This is very complicated, and actually, to give him his credit, he's not listening this morning, but Zach did post an interesting chart about this morning. Effectively, they want to measure progress against these so-called fiscal rules using something called public sector net financial liabilities rather than public sector net debt. Yeah, effectively, it means you can borrow more to supposedly invest more in the economy. At the same time, there were also reports this morning that the government want to give a whole lot more power to unions to ask for pay rises. So that will probably swallow up all of that cash anyway. But that is The change in that debt measure is the reason why we still see gilts trading quite substantially softer at the open. I think the 10-year was up by 6 or 7 basis points at the open about 40
Yeah,
minutes
big old
ago.
gap.
And that's because it is raising the prospect of one, a higher debt burden, and two, more debt issuance, because obviously they're going to want these funds to somehow invest it in,
This,
overpaid union bosses' pensions,
I'm sure
probably.
this will be topic du jour at 9 o'clock in 40 minutes when myself and the awesome Helen Thomas from Blonde Money does our political blast.
What a
What a
segue!
segue that is, right? What a plug, shameless. But just before, because I don't like swearing in front of Helen because she's a lovely young lady. But I'll swear in front of you.
I'm not a lovely young man.
You're not a lovely young lady. But what the fuck are they doing at the Treasury now? It's like they're putting all these austerity measures in, like cutting fuel payments also, and then after they've done all of that, after they've also given a load of you know train drivers and all this sort of big old lumpy pay rises after zero negotiations, they've just handed over whatever was requested. And after all of this, they're then and complaining about the black hole, this mythical black hole that they won't provide any actual details on. And then after all of that, they go, actually, do you know what? We're going to just change how we measured debt anyway, and yeah, we're just going to borrow some more. It's
Yeah, it's a joke.
are they? Have they got a strategy in place, or are they literally waking up in the morning, coming to the desk, and say, okay, well, this is today's problem. How do we solve only today's problem, or just? Oh, anyway, sorry.
Oh no, you're right. It is utterly stupid, but unfortunately, that's the situation we're in. Anyway, on that
Oh
optimistic
god.
note, that was pretty much
Oh well,
it
look,
from me
it
this
gets
morning.
far
So,
better. Hi Zach.
oh, good. Are we going to the Middle
Well, not
East?
quite. But on this day,
Oh, right.
obviously the following headlines from our friends Andrew, Zach, and the team at Newsful. On this day, 1929, Black Thursday, the start of the stock market crash. The Dow Jones average dropping 12.8%. Back when 12.8% was a lot. So there you go.
When was that? Sorry,
Yeah.
1929. Oh, I know we mentioned him earlier,
Oh,
but we'll
Dickie
have to get
Matthews.
Dick on
Yeah.
to ask for his
What happened? He was on the
experiences of that
bid.
day.
Um,
Yeah.
anyway, we digress. So in Gamma news, S&P, so SPX long gamma positioning is over 11 billion between 5,710 and 5,975. And UBS is saying that this is keeping the price index movement subdued this week until we get through that. Apple's CEO Tim Cook is likely visiting China to bolster support for Apple Intelligence. He's met with China's Minister of Tech and some local companies such as China Mobile and Weibo. In inflation news, billionaire hedge fund manager Paul Tudor Jones said all roads lead to inflation. And to quote, I am long gold, I am long Bitcoin, I am long commodities. Some more jovial news. Insider selling. The ratio of insider selling to buying has reached its highest level since early 2021, particularly in the short sector. There's some geopolitical news. The Pentagon says that North Korean troops arrived in Russia and they predict that they may be sent to Ukraine. Moscow warns Seoul that there are security consequences if Seoul gets involved in the Ukraine war. Just a bit of colour on that for those that aren't aware. South Korea have reportedly said, well, if the North are sending troops, we're going to send artillery. So that's a bit of colour on that news. In China, China's yuan is feeling the pressure from possible return of Donald Trump. Sorry, not just from speculators shorting the currency, but also mainland exporters who are now hoarding dollars. Um, you've reached. Sorry, you mentioned the ECB. Global bond sales climbed 17% this year to about 9 trillion, with movement from the third quarter, sorry, likely sustained. That's from S&P. China is pressing ahead with plans to rapidly upgrade and expand its nuclear weapons arsenal across the land, sea, and air. That's according to a new US assessment. Lovely jubbly. More jovial news. Shares in Chinese manufacturers of polysilicon, and this is important because it's the key material in solar components, is extending a sharp rally on expectations that government will move to curb production to tackle the current massive glut. So one for your green and ECG names on that one, I assume. And that's pretty much it, to be honest.
Cool.
Cool,
Good
cool.
stuff. All right. Well, in terms of the day ahead, then, we kick off relatively early this morning with the latest flash PMI figures from the Eurozone due in 15 minutes' time at the top of the hour. The manufacturing and composite numbers expected to remain in contractionary territory, while the services figure expected pretty much unchanged at 51.5. We did have pretty grim French PMI figures out around about half an hour ago, but I believe, and I didn't have a proper look at it because I was beginning to talk to you, Ryan, but I believe that the German data we had out around 10 minutes ago was marginally better than expected. So
On
perhaps
this,
expected.
so marginally better than expected.
Oh, here we
Well,
go.
marginally better expected. Okay, yeah, gold star. But manufacturing PMI was 42.6. Now, it's only getting a green light on my little automated tweet because it's better than expected. That is still absolutely horrific.
Yeah, that's
It's awful.
yeah. I can't use the word I was going to use then, but yes, it's terrible.
Scheiße.
I've been told to be on my best behaviour, so I'm trying hard.
I am also trying. It's not succeeding.
Indeed. The PMI numbers continue at 9:30 with the data out of the UK. All of the manufacturing services and composite metrics expected to remain north of 50, implying expansion, but also pretty much unchanged from the pace that we saw in September. Moving into the afternoon at 1:30, we get the weekly jobless claims figures from the United States. Initial claims expected at 242 from a prior 241. Continuing claims probably of more importance given that the data coincides with the survey week for the October non-farm payrolls number. Continuing claims expected at 1.875 million for a prior 1.867. Into the rest of the afternoon session, we get the flash PMI figures from the United States as well. Although, of course, bear in mind that this is the S&P Global survey, whereas the more widely watched ISM figures are not due out until the back end of next week and early the week after. And also at 3, we get new home sales data from the United States. Obviously, after the rather catastrophic existing home sales print yesterday, we will see whether further fragility is coming through in new home sales as well. Central bank speakers galore once again. We hear from the Fed's Hamak, we hear from the ECB chief economist Philip Lane, as well as his mate Kazaks, and from the Bank of England external MPC member Catherine Mann, and the big man himself, Governor Bailey, speaking for the third time in as many days later on today. And last but by no means continues with a handful of notable reports before the market open. We hear from UPS, another useful bellwether stock.
He loves a bellwether.
Particularly,
He loves a bellwether stock.
well, particularly given how much business is done online and with e-commerce these days. I mean, everything that you buy online has to be delivered to you. So it is useful to gauge broader trends as a result of what UPS may have to say. And we also hear from some of the airlines before the open as well. American Airlines and Southwest reporting before trade gets underway. We will see whether their stock takes off or has a crash landing. And indeed, of course, whether the market loves the earnings that we get from Southwest.
That's I like that one. You have to work for that one.
I was going to say that one for the equity traders.
One for the purists.
Indeed, and that on that note, that is pretty much it in terms of the day.
Before we crash and burn, let's call it a day.
I thought we already had.
Well, you know. I don't think we took off in the first place. God, do you know what? I apologise for that. I'm gonna go and have a quiet word myself. Right, Mr. Brown, thank you as always. Listeners, thank you as always. If you are around in 10 minutes' time, myself and Helen Thomas will be doing our little weekly political update and its implications for markets. I assume she will be talking about the gilt move and the latest news from the Treasury, as Michael alluded to earlier on. But if not, we will see you tomorrow. If you are trading today, as always, keep it tight. See you later.
Thank you, guys.
Bye.